Hey there. For beginning, myself and Paul just want to remind you that everything discussed here isn't a substitute for formal investment advice and does not represent the formal perspectives of Aquarium Investments. The content of the discussion will hopefully interest you, entertain, and supplement your own perspective, but it's important that you conduct your own research or speak formally to a financial advisor before taking any risk with your money. Having said all that, we hope you enjoy the discussion and let's dive in. Hello there, Paul. How are you doing?
Hey Cormac, I'm doing great. How are you?
I'm great as well. We're back here for our return a year after we started doing this podcast, so it's great to be back. Today is 15th of October 2025. How do you feel about it? We've gotten a year into this.
Well, I feel like we're due for a birthday celebration.
That's very true, and I think we should tell the people listening that our birthday celebration is you coming over to Ireland, and we're going to introduce you to some Irish culture, including some rugby. So
Yes,
I think that's a pretty appropriate birthday celebration. Would you agree?
I agree completely, and I'm looking forward to it.
Great, great. So for people that have been listening, they might be wondering why it's taken us a little bit, I think, over 3 months to record since our last one, which was in July. I've been busy with life and I'm trying to, if I be completely transparent, trying not to drown while learning how to do triathlon. That was my big thing.
You seem to have managed.
I managed it. My stomach didn't manage it because I drank a lot of Dublin's main river, the Liffey, in the big race we had in August, and yeah, I had to figure that one out afterwards. And the stomach was pretty bad for a week at least, but that kept me busy. And then from your end, you've just been. I think Aquarium have been doing super well, and it sounds like from every angle you guys have been super busy. Just it's a complaint, but it's a great complaint when you're so busy, and that's tied us up.
Yeah,
Um,
yeah.
yeah.
That's true. That's true. It's been a very good year, and the last couple of months especially. So yeah, busy.
So that's obviously kept you busy as well, and now we're finally getting around to our next recording. So yeah, it's great to be back, and today we're going to talk about Europe, the place where both of us live. We're going to discuss that continent and how economically Europe is performing in
Yeah.
the grand scheme of things, and going to review how we're shaping up compared to everyone else. So yeah, that's the plan. So before we get going into the meat of the topic, what we did last time was we discussed two top events that occurred in the last period. We each picked one. So would you like to lead that, Paul? If you pick some topic you think has been quite important in the last while that you think is influencing things, and just give us a little rundown.
Sure. So for me, a lot of things happened. Like literally every day, something happens, and with the geopolitics and Trump and everything. But I guess for me, being a market practitioner, I would say the restart of the interest rate easing cycle by the Fed, the fact that they cut rates again is important. I feel it's an acknowledgement of real problems in the economy. Powell just yesterday said that they're about to stop the QT program, which is another important point. And what struck me especially is that there seems to be an acknowledgement of problems in the U.S. labor market, also by Powell himself, which is quite rare. He typically would say how great everything is, and him saying that it's not as good is very important because employment is one of the mandates for the Federal Reserve. So it gives them an excuse to cut rates more aggressively, and I think that's exactly what we're going to see. What about you? What did you pick?
Well, I've picked one that is very recent in terms of geopolitics, which is the resolution of the Middle Eastern conflict between Israel and Palestine. Um, I mean, obviously, this is massive in terms of peace in the Middle East, and it's been a topic that a lot of people have been very, very, very invested in for a long time. But apart from the political element of it, I think that what's so interesting to me is that watching the US and watching how Donald Trump has been engaging with the Middle East for the past several months, I think that we are at the beginning of a cycle where the US are potentially pivoting away from Europe and pivoting far more into the Middle East. I think that it's no coincidence that Donald Trump has spent a huge amount of time visiting the Middle East in recent months. He's obviously been in Saudi Arabia, and he's agreed a load of financial deals with them. I think the last thing that Donald Trump was quoting in the last 2 days was that the US has, I think, nearly guaranteed 15 trillion worth of foreign investment, and a huge portion of that is actually coming from Saudi Arabia and the Middle East as well. They're pledging all sorts of investment into AI, and they're also getting military equipment from the US in turn. And then similarly, I think if you see the engagement with Qatar, Trump received the big airplane a few months ago for the US, and then there's also sorts of investment talks there. So I really think personally that we're witnessing the very beginning of a pivot away from potentially Europe and more towards the Middle East. I think they see it as a big investment opportunity and a frontier. And so I think that this peace agreement which has been achieved in the Middle East, which is obviously phenomenal in itself, I think is also underpinning a general trend which is going to take place over the next few years, which is a move to the Middle East for the US. So I think that's a fascinating kind of topic for me, and I thought it was quite interesting to be observing that simultaneously. So
Well, let's
yeah,
hope. Let's hope the peace agreement stays. You know,
yeah,
I have my doubts, but I'm hopeful that it will last.
yeah. Well, that's all you can be, right? You can only be hopeful of peace maintaining. Yeah, and I agree with you there. There is tenuous elements to it, and then also for years the whole conflict has been talked in context. When you step back from it and look at it a bit more, it's this topic of a proxy war between Iran, China, and potentially some others versus the US and Israel. So it's kind of in that light. It's been quite tenuous to consider that peace will just necessarily exist, but for now I guess we can kind of hope, right?
Mm, we have to.
So there you go. That's my big topic, which I think is pretty big as well.
It is. It is.
Great. So let's now start our usual with our overview of key market assets and how things have performed since the last recording. So maybe you'll lead that, Paul.
Yeah. So as usual, we are starting off with the dollar index, and it can be seen that it's pretty much in the same place. It barely moved, maybe up a little bit less than 1% since our last recording. I think you have to keep in mind that the dollar had a big fall throughout the year, and I look at this as some sort of consolidation phase. It will be interesting what happens next, but yeah, not much change. A lot of change in the spot gold dollar pair. It's been up 25% since we last spoke, so a big move. We're trading at 4,200 or thereabouts. It's been a big year for gold, so normally gold in dollar terms would move maybe 7 to 9%, maybe 10% per year. This year it's almost 60% now, so a huge statistical deviation, maybe 5-6 standard deviations. So an abnormal year, statistically speaking. I think we mentioned this last time as well, that we kind of expected this, but not to this degree, of course. I think it's just a sign of a changing monetary system. I think there's more and more demand for gold as a kind of neutral asset, especially for central banks, but also for literally anyone. And I think it shows us, we'll talk about euro a little bit, but I think it shows you the actual debasement of currencies as we progress. So silver dollar spot rate again, even bigger move, 38% almost since mid-July. So again, we've discussed this. It does seem that silver is catching up to gold. Historically speaking, it's a natural progress. So gold would typically lead the commodity cycle, and then all other commodities would kind of catch up, and then they outperform. And this is exactly what we're seeing. So, big move expected by us, but not on this magnitude, I would say.
And Paul, why briefly, you say it's expected, but why did you expect it, if you could, in short?
You mean gold or silver or both?
Both. I mean, they're both, I guess, considered hedges against volatility in some ways, right? But is that all that drives it in this scenario?
Well, it's up for debate. What drives it? There are similarities in both and differences in both. So, with gold, I consider gold to be a currency, right? So it's not a commodity per se. It's more of a currency that cannot be printed. It has a limited kind of supply. So with gold, I think it's just demand from central banks, a search for neutral asset. We've discussed BRICS using gold in their settlements, right, as the neutral asset. I think that's a big role, and that's a big reason why it's going up. Silver is a little bit different. It's kind of quasi-monetary. It's used extensively in the industrial production in different areas, but it also has some monetary uses as well. It has been used as money for a long time, less so recently. But I think with silver, it's also a question of supply and demand, right? There seem to be shortages, like physical shortages of the metal on key exchanges, and you can see it through. We don't have a chart for this, but you can see it through lease rates for silver. They spiked significantly. You have backwardation of spot versus futures prices, which also indicates some shortages on the short end. So I think there's just not enough of it. There are deficits, and that's what's driving it as well. But it's also the debasement trade, I think, much like with gold. Why we were expecting it? Well, it's basically our investment thesis for a long time. We believe in debasement of currencies, the loss of purchasing power of currencies, irrespective of what the currency is. So investing in something physical, something productive, is basically our approach to capital allocations. That was a long answer, man. Anyway.
No, I did subscript that by saying if it's possible for it to be short, but I know I'm asking for a lot, not from you, but in general. These topics are really complex, so you did well. Thanks.
You're asking the wrong guy for a short
No, either way, that was very insightful, so thank you.
No worries. You're welcome. Okay, so let's move on to S&P 500 and Nasdaq. So decent rallies for both. So Nasdaq moved up a little bit more than 8%. S&P is up 6.5%. On the year, I think it's around 15% for both at the moment. So good period for U.S. stocks as well. I guess it's still driven mainly by all the AI stuff and LLM model stuff. So, we've discussed this before. But I think also the rate cut helped a little bit. It gives equity investors some comfort that, rates are lower. So you discount future cash flows at a lower rate. So theoretically, it should be good for stocks. So, good period for these. Emerging market stocks, again, very similar. They performed even a little bit better, almost 10% since July. EM bonds, also good year as rates go down everywhere. They go down for emerging markets as well. So about 4% gain. US rates curve, we're looking at two lines again. So the white line is today's curve, and the blue line is a curve on the 14th of July when we recorded last time. you can see that the rates have dropped on all maturities pretty much. And again, it's consistent with the rate cuts on the short end. I mean, that's something you would expect. There's a lot of debate of what's going to happen on maturities from 10 years onwards. I have some reservations about this. I would expect rates to drop on the short end, so, Fed funds rate and maybe up to 2 years. But I think they will remain higher for longer maturities. There was an interesting story with the latest Fed meeting. So this guy Miran is on the committee now. We've discussed them again before, right? He was the guy that was telling everyone that foreign nations have to pay for the privilege of using the dollar. Now he's on the Fed committee, and I think he was the guy that voted for huge cuts into year end, so maybe 1.5% into year end. And it was also him who came up with the idea of a third mandate for the Fed. First mandate is employment. Second mandate is inflation, so price stability. And he came up with a third one saying that the Fed should consider a third mandate of stable, longer-term maturities, right, implying yield curve control in the future. There seems to be not enough demand on the longer end, but nevertheless, the totality of the curve has dropped, right? And we'll finish off with our usual and our favorite chart, which is Bitcoin, which has been going up as well as alongside the Nasdaq. So Bitcoin and Nasdaq with 3 times leverage. Just to rub it in, so to say, Nasdaq is up, Bitcoin is up. No surprises there. They seem to be following each other pretty tightly.
And what do you think does that give you any impression or insight into the nature of Bitcoin? I know that's the topic that often is debated. Is it a commodity, or is it something else? What do you think? Does that mirroring tell you anything about its nature?
Yeah, it says everything about its nature. If it quacks like a duck, walks like a duck, it's a duck. So same principle here. They could decouple, right? We're looking at the past here in this chart, so the future could be different. And if you look close enough, you'll see that there are periods when they diverge, right? They go into opposite directions, even not let alone follow each other precisely. So, but generally speaking, on a longer kind of time frame, you can see that they are similar, very similar in their price action.
I think you're right there. Even July was the last time we talked about this exact point, because it's an interesting one for me, and I think for young people or potentially people who are thinking about Bitcoin for a long time.
Yeah,
it's an interesting point, and we talked about this because there was a period where it looked like the two did decouple, and it was giving you an impression that Bitcoin was not necessarily aligned with the Nasdaq, and you can actually see it in the graph that we've on the screen, that when you look, there's like a huge drop there in Bitcoin and an increase an increase in the white and a drop in the yellow, and that was a period where people were saying, oh, there's a decoupling. But then when you zoom out on your graph, like all things related to graphs and numbers, when you zoom out enough, you can get a completely different picture, which is what we're seeing here.
Yeah. Look, again, I have nothing against Bitcoin per se, It's just, I think it's very important to avoid illusions, Like for me, living in an illusion is the costliest thing you can do. You waste your time, typically you waste money, because you think it's one thing and it's actually something else. So with Bitcoin, I have no problem with it. I think it's an interesting asset to own in specific situations. So you can see it's very volatile, right? But it's kind of like a liquidity proxy. For me, it's kind of a subsector of the tech industry. That's the way I look at it. So similar to big tech stocks, right? I think that similar things impacted as they impact tech stocks. And I think it's the right way to think about it because it's not a maximalist view, but it allows you to trade it, kind of thing. I disagree completely with the notion that it's digital gold or it's somehow comparable to gold, because it's not a currency. It's too volatile to be a currency. And, central banks mainly don't hold Bitcoin. You have a couple of countries that dabble in the idea, also US. But if you look at what they're doing, they're not buying Bitcoin for their reserves. They're just taking the seized criminal Bitcoins and hold them, right? So they're not actually buying, which I think is right. It carries a huge political risk if you start doing this. But basically, until all nations or the majority of nations start buying it for their reserves, you can't really call it a reserve anything. And obviously they're buying gold, and as we have seen, they're buying in size, right?
Yeah, and you mentioned there living in illusion is probably the biggest mistake you can do, which is a kind of a perfect, nearly a perfect segue. We're not going to segue directly into talking about the EU yet, but on that, I agree with you entirely that the desire, I guess, for Bitcoin to be comparable to digital gold is a little bit of a, I don't know. There's no necessary evidence that that's the case. And for a while we were looking. I think even in the last discussion we were looking at the U.S. and I remember they were trying to establish a Bitcoin reserve in the U.S. and maybe in the long term there's still some sort of play that they're building up towards where they're going to build up a reserve of Bitcoin and start treating it as a primary reserve, but it doesn't seem at the moment, looking at this, that that's the case. And then I've always had the impression with Bitcoin that it's a gambler's way of getting rich for a lot of people, and people often talk about Bitcoin. Again, I don't have any resentment towards it, but it is funny that it's a lot of people have said, oh, you can get rich trading on Bitcoin, but I mean that's basically the Michael Saylor principle that you invest enough money of your company into Bitcoin and hope that it goes up and then you're going to get rich off it, but that doesn't have any actual connection to financial stability or reserves or central bank reserves or anything like that. That's just trading off something to get rich, which is a completely different principle.
So exactly, if you don't have this illusion of it being a wealth preserving kind of asset, it actually frees you up to trade it easier. It's for me anyway, it's easier for me to approach it this way, and it actually allows me to trade it. We don't really trade it that much. We had a few instances in the past, but it's this approach allows you to trade it and not be a maximalist kind of guy, right? And it's just like, for me, it's just a better proposition, an easier proposition, and it allows me more flexibility.
Yeah. Very good. So I think that's enough talking about Bitcoin. But so then, looking at all that, what if you were to briefly say? I mean, we kind of already touched on it that Aquarium have had a great period, but what was the impact then for the company and the clients?
So this year has been very good for us. We made a lot of money for our clients. I think everyone should be pretty happy with the results. Our investment thesis is working out. We've been long gold, silver, EM stocks, US stocks. We were right about interest rates. So it's been very, very good. And this period in particular, last couple of months, we made a lot of money, and I'm very happy for our clients.
That's great. That's what you want to hear. You're making a lot of money and you're very happy. Those are two nice things.
Well, money and happiness are different things. Money doesn't bring you happiness at all, But it makes me happy that the fact that our clients are happy makes me happy,
Yeah, that's great. That's good to hear. And it's obviously kept you super busy as a result.
Yes, that's true.
Okay, so that's very good. Thanks for that breakdown. As usual, it's always very interesting. And it kind of sets the framework for the topic that we're going to cover today, which is the EU and EU's economic situation and performance. To date, in all our podcasts, we've covered different overarching topics, I guess, and we've discussed BRICS in the last one. We discussed the US the time before that. We talked about, I can't remember what the topic before that was, but we discussed the US election prior to that as well. And now I think it's pretty necessary that we also look at the EU and how the EU is shaping up. So yeah, we're going to talk about it, how we're doing, how EU is shaped up, and maybe Paul, would you lead us into that conversation?
Yeah, so we obviously in Europe, both of us, but European markets have not been my focus at all, right? We do trade some European bonds and stocks, obviously, but these would be like local stories, more or less. And my main focus was always on US because it's just a bigger market, and commodities and currencies and things like that. I always found European economy difficult to analyze because it involves so many different countries in very different economic situations, in different points in cycles. I don't believe Europe is harmonized, as they say. It's very different whether you go to the south or to the north. A lot of cultural differences as well. So it kind of makes these broad averages and comparisons abstract, right? When you talk about inflation, we are going to look at a couple of charts. When you look at average inflation in EU, what does it actually mean? Nothing for Latvian or Irish, right? It's just an abstract number because the economies are so different. But generally, I would say, if I had to say one thing about Europe, is that there is a lot of doom and gloom kind of approach these days. Everybody thinks Europe is doomed and all this. I'm not actually in that camp. I have a lot of faith in Europe. I think it's a great place. It just needs a bit of guidance. I'm a contrarian by default, right? So when people are one way, I tend to lean the other way. So I'm more optimistic than most, I would say.
Maybe, Paul, though, if you're contrarian to the perspectives I offer, and I'm a contrarian, maybe you end up in the
It's double
original
contrarian.
position. Yeah, double contrarian. Maybe end up in the default position again.
Yeah, we'll see how this conversation goes, maybe.
Um, yeah, I mean, I guess it depends on who you mix with. Maybe in Latvia, the perspective is that the EU is not performing well, or maybe it depends on who you're interacting with in whatever industry you work in. I guess my own perspective when I talk to people in Ireland is that a lot of Irish people are very Europe gung ho. And I mean, Ireland, for instance, has done incredibly well from the EU. We were probably the most impacted by joining the EU and joining the euro, and all the investment that we've had into this country has been phenomenal. It's changed Ireland completely. So it's not like I'm at all a euro skeptic, but I guess when you then look at how things are performing now and what's going on in terms of how a lot of Europe has become, in my opinion, a very, very over bureaucratic in many ways. I do become a bit more skeptical to how it's performing. And like you're saying, for the long term health of European nations, it probably wouldn't be wise to hope that the EU does collapse or fall apart. But it does need some sort of guidance and some sort of veering away from the over bureaucracy and over regulation, I guess, that's been happening a lot and has been noticed a lot in the past 10 years in particular. So I guess that would be my perspective on it.
When I say, I'm more positive, it doesn't mean I think everything is rosy and dandy, right? There are a lot of problems. It's just there's so much negativity about Europe these days that I can't help but find some positive signs, and I think we'll look at some of them today.
Yeah. So you talked there about many different countries with different economic situations and how it kind of pulls together this overarching group. I think that's a really important point. But what we see a lot, and what a lot of the talk in Europe has been, from especially from high up in Europe, is the desire for Europe to become this federalized entity, which is all nations combined into one. So it's very much the idea of veering away from this free trade area where economies, individual nations and countries trade individually and keep their economies going that way. And the hope then from the higher ups in Europe, a lot of them based in Brussels and Berlin and so on, is that Europe becomes this federalized state instead. And that's probably lending into a lot of this growth in bureaucracy, a lot of growth in centralized power in terms of Brussels, and then potentially leading to a lot of dysfunction and over-regulation. That would be my perspective, I guess, just to elaborate on it a little bit more as well. But maybe you could break down some of the stats on this. Would you like to do that, Paul? Relative GDP by country, and have a look at that?
Yeah, we could start with inflation, which I think kind of ties into the debasement, the currency debasement thesis, right? So we're looking at this chart, which shows you EU inflation, the average one, which is the white line, and then a bunch of different countries. So I picked Germany as the biggest economy. We have France and Italy, so top three economies size-wise. And I've added Ireland and Latvia because that's where we're from, right? And I think this chart illustrates what we've been just talking about, right? Because like if you look at inflationary pressure in Latvia, for instance, it's way out there in comparison to the averages, right? So, almost 20% in 22. It's obvious why this happened. The war in Ukraine, I think, was the biggest reason why this happened, because of such close ties and energy coming from Russia and all this. It kind of shows you that it's very different in different parts of Europe. But if you look at the average, inflation is not that high. It's around 2%, which is the Fed's target that they have abandoned. And obviously, Fed has nothing to do with Europe, but it just shows you that 2% is kind of acceptable for monetary powers. So we're kind of there. It's not that bad. Do you have any comments on Irish inflation, maybe?
I don't, other than I'm getting very sick of it. Because what was it I was getting? I was buying something recently, and oh yeah, there's a pasta bar around the corner from me, and it's been, I think, 2 years since I last went to it. And last time I went, I think it was around €9, €10 for a bowl of pasta for dinner. And I went yesterday, and it was €15, and that was kind of, it brought it home to me again. I mean, it's not the end of the world, but it's still, I'm not enamored with it.
Yeah.
And I mean, Ireland has its own problems as well in terms of cost of living and energy, and housing in particular is a big issue in Ireland. I know that's not unique to Ireland, but I think Ireland is, from what I saw recently, is probably, I'm pretty sure I read this on a graph, that is the most expensive for renting in potentially the world, and that's just a supply issue. It's not a demand issue. So Ireland has other problems as well in terms of cost of living, which is driving inflation in Ireland. But yeah, that would be my thoughts on that matter.
So if you look at statistics and especially inflation, because this measure has been influenced a lot and manipulated a lot, because you have all these kind of inflation-linked pensions or readjustments. So basically, in my view, governments all over the world are kind of inclined to push inflation lower than it really is, just for these kind of social transfers and stuff. But you look at 2% inflation, and it has nothing to do with reality, right? For me, always real inflation, I was always expressing it in gold terms. So if you look at gold, we actually have a chart on this. So if you look at spot price of gold versus euro, and it's a long chart, right? It's from around 2000. It's been going up at about 10% annual. So for me, this is the real inflation rate rather than the 2% that they tell us about in newspapers. And that's the gist of it, you know. So if you're realistic about it, prices are going up at around 10% per year. Well, okay, gold has spiked this year a lot, but even if it's like 8% or 7% per year, that's way bigger than the average that we see in the chart of, you know, average inflation, even if you look by country. So I think again, it's about avoiding illusion, you know, and I'm not saying you should mistrust official data, but you should be very conscious about how it's being calculated, and it's basically an exercise in econometrics and statistics, right? So you can take bits out, like what the basket is, how they're collecting it, what are the weights, all these things. But it kind of brings us to this chart of yours that you provided. It's the same chart in reverse.
Yeah.
You know, it literally tells you that euro has lost 90% of its value in just 25 years, right? And that's the problem. That's the real problem we have with current system, because current system it's designed in a way to facilitate inflation, basically. And that's exactly why we have all these K-shaped economies where we have, you know, the rich doing well because they have the assets to invest and kind of fight this debasement. And then you have the poor, quote, quote, you know, the guys without assets that cannot fight it. They have nothing to fight it with. And it just, to me, the biggest problem is that it brings about this ever increasing wealth gap, you know, and it's nothing good for anyone, whether you're rich or poor. It's a bad situation because it leads to social unrest, unhappiness, you know, all sorts of bad things.
But can I just ask you about that, Paul? Because, you know, obviously that's something I would relate the US to, and I think I've seen graphs. I'm not sure if we have one for this right now, but I've seen graphs where the gap between the wealthy in the US and the regular citizens, maybe working class citizens or so on, has just increased exponentially year on year for past 30 years or something like that, 40 years maybe onwards. And do you think that's the case, the same with Europe? Because I mean, quality of life in Europe is pretty good. It has been pretty good for a lot of people for a long time. And okay, there's always going to be people who are quote unquote the poor, as you say, and the desire should be for any economy and any society to make sure that there isn't people struggling and, you know, poor as such. But in terms of general quality of life, and I'm talking apart from inflation, it has been quite good in Europe and quite, I guess, egalitarian compared to places like the US. Would you agree with that, or what do you think?
So I think currencies are being debased globally. So in that sense, it's the same. Maybe we have it a little bit better than US because we have a bunch of social transfers mechanisms. Not everywhere, but in a lot of countries. So maybe it's a better proposition for someone without assets. But like, just imagine you've been in one job for 20 years, say you're employed, and your wages have gone up in line with official inflation, which is not set in stone, right? It's just an assumption. Some people have the same wages 20 years ago, or maybe it didn't go up alongside official inflation. But then you look at the euro gold chart and you understand that this 2% have not compensated you for the purchasing power loss. So
Yeah.
essentially, the system just keeps the wealth gap increasing. The way it's designed today, it's just going to keep increasing and increasing. Now, look, obviously, nothing stops people from becoming rich, right? You can start a business, you can be successful, whatever you do, right? But it's not for everyone, right? Some people just can't, they're not entrepreneurs, or they don't have talents, like, I don't know, musical talent or something. So, for these guys, it's a very, very bad proposition because they can't save pretty much, right? They have to rely on state pensions or something like this.
Yeah.
So it's very similar, I would say, and it's probably worse off in US in terms of the wealth gap. I would say this.
Definitely is. I've seen the stats on it. Yeah, 100% is.
Yeah. So in that sense, yeah, it's not as bad, but it's still pretty bad.
Okay, but I think there's one point to be added to that because, as you're mentioning there, the system facilitates the growth in I guess you'd call it inequality. And now a lot of people maybe not interested in economics or not minded to economics or even to the idea of innovation and production would argue, well, the only way to close that is by therefore clamping down on the wealth creation, right? So to stop the wealth creation, to ensure that everything that is being created is instead being redistributed, right? That would be the classic case, the socialist case, or in the more extreme scenario, the communist case, which we're well familiar with. You and I both have interest in that topic. But that would be the argument for a lot of people. Therefore, they would say, well, we need to stop the wealth creation, we need to stop the production and stop the development, and instead make sure that this is redistributed. And I would argue, and I don't know if you agree with me, Paul, on this, but I would argue that that's the steps that the EU have taken for many years now. That it's been a case of, well, let's actually stop the development of ideas here. Let's regulate more. Let's ensure that it's redistributed more. I mean, you look at Ireland. I think Ireland we're in the top 10% or the top 10 tax rate countries in Europe. I think it's like overall 54% when you add in all the different elements, PRSI and so on, VAT and everything. But so that would be the argument I would have thought in Europe, and it's like to centralize everything, to instead redistribute and clamp down a lot more on industry. Obviously, there's this connection then between the Europe ambition for having a green agenda and making sure that green policies are also implemented, and that also does involve deindustrializing. It involves taking away from the the capitalist endeavors, I guess is what you call it. But then the argument becomes, well, that is that the right thing to do or not? And I would probably be of the view, and I'd imagine you'd probably be of similar view, that you need to actually keep producing, which is what Europe hasn't really been doing. Instead, they've been regulating and over-regulating. What would you say?
Well, I'm not a socialist or a communist, so I don't know what the argument is. I think the idea of limiting wealth creation is dumb, as you say. I don't think it works. I think you need an economy that works and is productive, in a sense that, you have innovation, you have new products, you have services that help people live, and they're happy to pay for them. I think it's less to do with social policies. I think what EU is doing is just they have to have these social transfers for people not to revolt, pretty much, So that would be the biggest motivation, the way I see it. But in terms of why the wealth gap keeps increasing, I think the biggest reason is just this continuous debt creation, low interest rates. We had negative interest rates in Europe, which in theory should not even happen,
Yeah.
right? Because
Yeah.
it's literally saying time is not money. It's the reverse of that.
Yeah.
So it's kind of dumb on a very basic level. So it's just when you have these policies, low interest rates, liquidity injections all the time, it clearly favors guys with assets. Whatever the assets might be, real estate, equity portfolio, bonds. Well, maybe not bonds these days, but it favors the rich. It favors the guys that have the assets. They just get richer from these policies, while the people that are not that well off stay at the same level of capital. So they lose by definition. So that's the real problem. It's not really transfer payments or green agenda. Green agenda is just a stupid idea, It's just
we're gonna get some fire for that one. Okay.
Well, look, it's people think in binary terms. From my experience, you're either for green agenda or you're against it. Personally, I'm for a reasonable energy mix, right? There's nothing wrong with having some solar or even wind stuff, although I have big problems with that one. Hydro is great. For instance, in Latvia, I think we generate about 40% of our energy needs from hydro stations. So, but like other countries don't have it, for instance. So it's all about a good mix, and I think a good mix involves all types of energy sources, not just green sources. And the way EU approached it, it was like, we're going to be carbon neutral by whatever, 30 or 35.
2030, yeah.
Whatever. Yeah, it was like, as soon as they said it, I knew it was impossible, just mathematically it's impossible. It's interesting because there was a lot of criticism of China, for instance, because of the smog, 20 years ago, if you went to Beijing, you couldn't breathe,
Yeah.
Today, it's a different story. They went all electric. There are virtually no combustion engine cars in the center of the city. The air is clean. So, you can take this idea of, clean, safe vehicles and achieve good things, create a place where you want to live, and it's a healthy place to live. But it's different from, establishing solar farms or...
Yeah, well, I mean, that in that scenario, you would say, I mean, look, the barrier, I don't know China. I've never lived in China or been in China, so I don't know the culture there, but I do understand that a lot of it is very, very centralized power, but it's also centralized power without bureaucracy. So it's the ability to get infrastructure done, to get planning done, to get projects done. And you look at, you have some graphs there as well in terms of electrification in China versus Europe and US. And when you look at them, you can see that China is electrifying way more. And a lot of that probably is to do with their ability to just go at infrastructure and to do it. Whereas, like, what's it, the Three Gorges Dam in China is like the largest dam in the world and slowed the Earth's rotation by 0.01% or something like that when it was built. So it was some phenomenal industrial project that was developed. Whereas in Europe, you talk about energy, right? And I know this because it's my background as an engineer and a mechanical engineer. So energy was my big area when I was working in that area. And I remember there was reports coming out a few years ago about how in Ireland, how we had to move away from things like gas boilers and get away from fossil fuels, so that most houses in Ireland rely on a gas boiler, and most buildings as well, to be honest. And the objective was to instead move into air source heat pumps. And so what happened was all the regulations changed suddenly, and they became very, very stringent. And the plan was, well, we're going to stop using all boilers. You're going to get penalized if you build a building using a gas boiler, a natural gas boiler. And we're going to incentivize that you have to use an air source heat pump, even if it kills the... even if it's incredibly expensive and is going to make the building of the project really, really difficult. And now what you have in Ireland, for instance, is this kind of constant grind in terms of construction, where most builders and most engineers aren't actually able to reach the targets needed to pass the building regulations required. And that's all because some law was changed in Europe that said we're going to penalize you rather than incentivize you. And that seems to be the nature of Europe, where it's like, rather than say, okay, we're going to work our way out of this, we are going to penalize everyone out of this. And now I know, for instance, they had a report there that's saying that all gas boilers had to be, nearly all gas boilers had to be out of Ireland by 2030 or something like that anyway. And it just was unrealistic, because there was another engineering report, I think, from Engineers Ireland, who said that that's not going to happen, because we actually do need to rely on gas boilers still. We haven't got the capability to actually put in enough air source heat pumps and change this. So it just seems like, in terms of Europe, it just seems like this policy is punish rather than actually incentivize. And I think that's a big cultural difference between looking at Chinese energy production and European production. And I'll just briefly touch back on something you mentioned there, Paul, about, again, this redistribution of wealth and so on. And how the gap grows between those that are wealthy and those that are middle class or so on. I did see there something recently someone quoted online. I just thought it was a good point that from observing, it seems like nationalism in these nations, or nationalism in general, seems to grow from an unheard desire for some kind of change or some kind of response by governments. And I notice across Europe, I'm sure everyone does, that there is an increasing right-wing movement, right? And that is probably some kind of a reflection on how the policy of Europe has been punished rather than incentivized. And that's across most countries have some sort of right-wing movement taking place. So there's probably a little bit of that again. It's like, we're going to penalize rather than actually incentivize. And just to finish off my brief rant on this, you can tell I'm passionate about this. But I mean, you look at Germany, right? And Germany's denuclearized. It's one of the big things they've done in the past 10 years. They were going all in on wind turbines and solar farms and so on. And now Germany are in a situation where they have some of the highest energy costs in Europe. Their political far right party, quote unquote, people call it far right. I don't know fully what that means at times, but their political far right party, the AfD, are riding off of other issues politically, but also the energy issue. And it's like in Germany, people are struggling for energy costs, and it's because they decided they were going to denuclearize, and instead they were going to try to lean in on top onto wind turbines and solar farms. And now they have to borrow from the French grid, which is still nuclearized. So it's just like this crazy decision making from a centralized Europe that's washing through to nations, and it's damaging citizens. And I would argue that that's quite a big element of the hurt, I guess you could say, people feel in terms of wealth disparity and cost of living disparity. That's and true. So on.
This is true, of course. Personally, I have no problem with central planning. I think we always had it. We always will have it. It's just, centrally planned economies often associated with, USSR or China, and it has a negative connotation to it, right? But I think planning is essential. We plan in our businesses, right? If we don't have a budget, you're not really running a business, right? So planning is good. It's I think it's important who is doing the planning, right? And it kind of brings us back to this idea of a very splintered state of Europe, right? So German decisions impact French grids and vice versa, right? We actually have a chart on energy in Europe and generally. So we have a chart of German power price one day ahead, and also industrial retail electricity price to the right on this chart. I think if you look at it, you can see how 2022 changed a lot of things in terms of electricity costs. And obviously the Ukrainian war happened, and the Nord Stream pipes have been bombed and all this. So you can actually see the spike in EU industrial retail electricity price just at the beginning of 22. right? And by the way, EU is still buying Russian LNG, you know, in
Yeah.
big quantities. So essentially, Europe has replaced replaced natural gas from the pipe for the same natural gas coming in on the ships, right? So
Yeah.
again, in terms of, I mean, I'm not here to say it's a good idea or a bad idea to buy commodities and energy from Russia, but you know,
But
if you,
the logic of it is what you're
yeah,
highlighting. Yeah.
exactly. There's no logic. I mean, if you're still buying, you might as well buy the cheap stuff, right? I
Yeah.
mean, it doesn't make any sense to buy the more expensive stuff because Russians are still making their margins, and you paying more. You know, and I think the chart to the right is very interesting because it actually shows you who's competitive and who's not, right? And you can see that U.S. and China are about the same electricity price for industrial usage, right? So they are direct competitors, and the reason for this is they have well diversified. So U.S. is using a lot of coal. I think like 30% of energy usage comes from coal. They have a very efficient natural gas grid, very cheap again. China is very diversified in terms of what they're doing. Also nuclear. U.S. has nuclear as well. So they tried to during Biden time they tried to close some of these nuclear stations down, but they're coming back now.
Yeah.
And you see, well, UK is not competitive at all. So there's no way at these rates you can produce anything value added in UK. I would say
Jesus, for a country that loves boiling its kettle for tea, they're
expensive
punished
tea.
with expensive tea.
Well, obviously, still stuff is being produced in UK, but it's niche stuff, you know, something very
Yeah.
specific, unique, a lot of value-added things. But generally, it's uncompetitive, right? And it's amazing that Japan has better electricity prices than Europe, because Japan literally imports most of its energy. It's a small
Yeah.
place, right? They don't have too many sources of their own. So yeah, it's again, it's just illogical policies. I would call them that, and that's the gist of the problem. I would say that's the biggest problem.
Yeah.
So yeah, well, you mentioned Germany. We could look at a couple of charts from Germany. But maybe before we do that, let's look at GDP in different countries. Again, I have I have the white line as the average kind of pan-European GDP, and these are year-on-year numbers in percent to the right. And again, it shows you the differences. So, for instance, you have Ireland, which is a huge outlier, and the reason for this is the concentration of big American tech businesses. That's what
And
skews it,
pharmaceuticals.
and pharmaceuticals. And but the way the equation for GDP works, in the case of Ireland, it has nothing to do with the life of your average Irish citizen, right, or resident. Because the foreign investment influences it so much, right? And
Yeah.
you only feel it if you work for these companies or you provide services to these companies. But generally, I would say the GDP has been very, very low. So no growth at all, and it's a long period. So 25 years or so. And it's been kind of, on average, it's been pretty meh, nothing.
Yeah.
So that's the big problem, and that's the challenge that needs to be addressed. How is another story, but if we just look at Germany, because it is the biggest economy, it did suffer from bad policies, also green agenda. and others. But let's look at the German balance of trade.
I suppose, Paul, maybe it'd be worth because I'm often aware myself that I'm actually for a lot of the green agenda stuff. Like I do like the idea of a lot of the ideas of it, but I think it's like a mismanaged and badly planned green agenda. I think would be
Yeah,
more accurate, right?
I agree.
Yeah,
I agree.
just to clarify that. Yeah,
Yes, it's true. Again, it's not the planning; it's the bad planning, you know. And
yeah,
again, a good energy mix assumes a balanced approach to your grid and to what you're doing essentially. Like for instance, today there's we've discussed this many times. There's this push in AI and LLMs and all that, but they keep producing and building these data centers. They keep buying these chipsets. A lot of money is going into capex, but nobody's doing the maths. Nobody's
yeah.
asking themselves how they're gonna power all of this. There's literally no way to power the stuff that is being built. And I think both US and Europe are very slow to address this in terms of actual grids and connectivity. So that's another bad planning um, example, right? But yeah,
Yeah.
yeah. So nothing wrong with green stuff. Please don't shout at us. We know it's good. It just needs better planning. I agree. So we can look at Germany because it's the biggest economy and it had all these problems with energy, as we've mentioned. And we could look at Germany manufacturing PMI straight away. These are not seasonally adjusted numbers. But basically, an index like PMI, it has a threshold of 50. So anything below 50 points to contraction in the industry, in the manufacturing industry. Anything above 50 shows an expansion. And we are looking at the period from 2022. And it's obvious from the chart that the industry, the manufacturing side of the country has been contracting all through these 3 years. But the interesting part is that it seems to be picking up recently, right? And we have this up to September, so fairly recent. So yeah, it has been a bad time for manufacturing, but is it improving? Kind of looks that way, right? It's still in contraction mode, but just barely. So we'll have to watch this one. I think it's also interesting to look at German trade. So on this chart, we have German balance of trade and total goods export. The export chart is to the bottom right, and the balance of trade is top left. And you can see, like, for all the criticism and doomsday posts, etc., it's not that bad. You look at total goods export. Yes, it's dropped a little bit. Again, these are not seasonally adjusted numbers, so just raw data pretty much. You can see how the exports have grown over the past couple of decades, and we're still kind of at the top of it, not at the very top, but it's definitely a lot of exports, right? And the same goes for trade balance, foreign trade balance. It's positive. You can see the drop on COVID. You can see the drop as the war started in Ukraine, but it's back up there. It's in trading terms, Germany is doing fine. It could have done better, I think, if they had access to cheaper energy and less of these bad political decisions. But even with that, it's a pretty powerful economy if you look at these charts at least. And I think it's
And you
also
don't think, for instance, because I know with Germany there was talks of, well, I mean, you're just representing what's actually going on in terms of the charts and so on, so I can't really. I mean, it's a statement of fact more than anything, but they were having issues. I saw, for instance, Volkswagen were determining that they were going to leave a lot of or pull a lot of their plants out of Germany, despite obviously Volkswagen being one of Germany's largest automobile producers, and being based in Germany all their history. And they were determining that they were going to move to the east, somewhere like China or India or Pakistan or somewhere, to start producing cars at a far cheaper rate. You don't think things like that are starting to loom on top of European nations now?
So yes, I do think it's a problem. But if we're talking about companies like Volkswagen or BMW or Daimler, the big brands of auto manufacturing in Germany, these are not really German companies. They're global companies. They have factories all over the place, and I mean globe. So they are businesses. They are working for profits. So obviously, if they can't produce their cars efficiently in Germany, they'll move elsewhere. And this kind of explains the performance of DAX, which is German stock index, right? If you look at the composition of DAX, most of the companies are global companies. They're not really German companies. So yeah, you can see some layoffs in manufacturing in Germany, but a lot of it is just getting rid of inefficiencies on the business side. And again, I've showed you the charts of manufacturing PMI, and it has been contracting, right? So yeah, it's kind of in line with what we've said about manufacturing generally. I think it's important to look at this chart as well, which shows you the trading partners for Germany. So the top chart is total trade, both imports and exports, and I've put exports in the bottom right corner. And it's interesting if you look at the top 15 of both. You can see a lot of European countries there, right? So my point is that a lot of trade is going on in EU itself. So when we're talking about tariffs and the impact of tariffs and how manufacturing progresses in Europe, a lot of it is kind of internal. The trade is between EU members pretty much. And if you look at the top ones, like the majority of trading partners would be EU partners for Germany. So
Apart from the US and China.
apart from the US and China, yes. But these are the biggest economies in the world. You would expect them to be in the list of trading partners of the biggest EU country, right? I also think that government plans in Germany are very important, and this chart from Oxford Economics kind of highlights it. It basically shows you a comparison of budgets in 2024 and today. So the blue bars would be 2024, and the red ones are the new new plans for fiscal spending in Germany. And you can see how big the change is. And it kind of ties in with the low inflation relatively low inflation that we saw, at least the official figures, because low inflation is what allows you to run big deficits, right? If you run big deficits and the inflation is high, it's just going to make things even worse. It will lead to a spike in inflation, more likely than not. But if your inflation is kind of tied down and it's not as big, you can go for this fiscal push. And I think that's exactly what's going to happen. I think that's the plan for the totality of Europe, but also for Germany. I think if they do this, and there's nothing there saying that they won't, I think it will be very positive for GDP generally. Whether it's going to be productive or not, I don't know. We'll have to see. Depends on what we spend it on. There are big plans for defense industry, so surely some of that extra spending will go there. But a lot of it is also infrastructure, all types of infrastructure. So I see that as a positive, and I think
Productive infrastructure, or like infrastructure for production, or infrastructure for general things,
I think
like roads.
general things. I think it's general things. It's kind of tied into defense as well, because the way things look now, it's our current logistics. They're just not made for tanks or anything like that. So I would think it's more bridges, roads, and stuff like that. But it could be production as well. It could be manufacturing as well, in key kind of critical industries. I wouldn't be surprised.
See,
So
when you talk about all this, I still struggle to envision how does this improve quality of life for citizens in Europe, and maybe that's
it
not the
probably
discussion we're
won't.
having.
It probably
Yeah,
won't.
yeah, yeah. I think that's a big thing for me, because, like in Ireland, we've had a very, it's a quite stable country, and it's, as I said, we've benefited a lot from European economics, and we've done really well on that front, and it's resulted in quite good quality of life for most citizens. And then, obviously there's going to be, as you highlighted earlier, there's going to be some that you regard as the poor, who aren't as at the same level as everyone else. But broadly, on a broad spectrum, like, quality of life is good in Europe, to be honest. And I struggle a bit with what people discuss on this topic, because obviously, as you mentioned there, defense spending is a big topic now, and the US are pulling back from NATO, and they want Europe to step up to the fold. And this was a big objection for a lot in Europe, and I think there was a lot of paper tiger stuff from Europe, where they were saying, oh yeah, we don't need the US, we can go our own, we can figure all our own things by ourselves. And then they've now had to acknowledge since, like, okay, yes, all these European nations are going to have to spend on NATO. So there's an expenditure for every government that's going to have to leave local spending, and instead go into spending on this big military element. And inevitably, if they have less money to spend in any country, they're going to spend it less on the citizens, and so the quality of life of citizens is probably going to decrease. So I think I just struggle a bit with sometimes the narrative that the EU can do no wrong. Sometimes you hear that, maybe not in the circles you mix in, Paul, but certainly sometimes in my circles you hear it.
you overestimate my circles for sure.
Oh, well, either way. But sometimes you just hear people say, well, no, EU is just the bee's knees, and it's doing everything right. But, like, okay, you're pointing out there that Germany are trying to cut their deficits, but then they're going to have to probably spend it on things like military and NATO and so on.
Sorry to interrupt you. They are increasing their deficits.
Oh, sorry, yeah, increasing their deficits.
These would be increases in deficits. So
Yeah,
it's the same story again. It's printing money. It's lowering rates. It's
yeah, yeah.
in terms of quality of life. I mean, that's very abstract, right? What does that even mean? But, like, in terms of wealth, obviously these policies favor the wealthy. So it
Okay.
doesn't improve life for your average citizen at all, I would say. What would improve life for your average citizen is employment opportunities. So when you say, okay, we're spending on defense, we're spending on NATO, what you're really saying is we're going to buy weapons from US, because in NATO it is the United States of America that provide the weaponry. That's the point of NATO, really, economically. So I would say, the best way would be to build weapons yourself, not buy from US. Because in that case, that would lead to employment, that would lead to profits of local producers, and in itself, it gives a huge boost to a local economy, right?
Yeah.
So I would say focusing on itself, like following a strategy that is beneficial to yourself, is what makes life better for your average citizen. But
Yeah.
we live in a different world. It's probably not going to happen just like that. It's a runway of some sort, so it will take some time. But I hope it happens. I hope Europe has its own army. I hope that we produce our own, advanced weapons and provide security in that way.
I tell you though, I don't think that's going to happen with the way like they're going to have to really deregulate because talking about advanced weaponry and so on. I mean, like Palantir. There was a list. I'm not sure if we have it here. Maybe we'll find it afterwards. But it was a list of the top U.S. or the top companies worldwide, and I think the top 20 companies worldwide, and there wasn't a single European one in it. And this is like, we're talking about Meta, we're talking about all the big names, Nvidia, AMD, whatever else, and tech companies. I'm pretty sure they were. Sorry, and there's not a single European one in there. And if we look at one chart I had, which I think I sent you recently, it was on the AI bubble that's taking place in terms of expenditure and how different companies are investing in each other. And this graph or this graphic that we see, you can see how everyone is spending on each other. You can see Nvidia spending into OpenAI. You can see OpenAI then investing in Microsoft, and Microsoft investing back. So you see it's this one big network of big expenditure from these tech AI companies. And AI right now is probably one of the biggest growing areas. It's one of the highest capital expenditure areas in any industry at the moment. And that is the frontier in terms of a lot of military stuff, in terms of a lot of other technology, infrastructure, and so on. And if you look even at this graphic, it's all U.S. companies. Like these are all U.S. companies. We're looking at Western companies here. Obviously, they're probably Chinese companies that are as big as these, like that are producing deep seek AI and so on. But if you look down in the bottom left corner, there's Mistral, and Mistral is Europe's single large language model AI. So it's a French-based AI company. So that's Europe's example of what we're producing. And then you look at the greater scheme of things, and it's all US. And it's kind of like, well, I 100%, Paul, you're absolutely right. Like if you're going to improve the quality of life and the growth in your nation and in your entity like the EU, you have to develop it locally, but they will have to deregulate, because right now the way EU is, it's essentially regulate more, punish more, and don't let the growth happen, which is what we kind of see here in this chart. And we see it in other areas as well, don't we? I mean,
I agree.
It's kind of common knowledge, right?
Yeah, I'm not a fan of regulation. As you know, I run a regulated business in the financial industry, so I see this every day. I'm not a fan. None of my colleagues are fans. So yeah, there's way too much regulation. And this chart, it also highlights the need for energy and competitive energy, not just any energy.
Yeah,
So without that, and this applies to US as well, probably even more so given the investments. But I'm sure there are defense applications for AI. You can imagine.
Palantir is probably the biggest name for this stuff.
Yeah. So, but you can project it to drones moving together and some swarms and stuff. So there are obvious applications, right? So, but you need energy for that. You need to invest in your grids. You need to realize that you need to fight this fight. We don't at the moment, and I think that's a big problem. So for me, any successful civilization needs to think about three things. I think I mentioned this before. So like the three pillars of prosperity, I call them. So you need access to relatively cheap energy, but resources generally also. You need a medium of exchange that is fairly stable and predictable and acceptable. So ideally a reserve currency where your reserve currency allows you to buy these means of production like energy or commodities or some other resources. And the third one is technology, right? You have to be technologically advanced. And the way things are looking now, we still have a lot going for us in Europe. So we have We have lithography in Holland and a bunch of
AMSL.
and a bunch of other fairly advanced like Siemens, etc. Fairly advanced technological companies, but it's you can lose this advantage very quickly. And the way things are looking now, I would say China is at the forefront of this. In terms of, they seem to be ready, right? They're self-sufficient. They've got sources of energy. They've got energy producing capabilities, and we don't have that, you know. And it's very easy to lose this advantage, and it happens very fast. It can happen within a decade or even less.
Yeah, and I agree with you there entirely. That's the frustration for me, I think, because when we talk about EU, it's like this. I've always been proud to be someone from Europe, but at the same time, I'm incredibly frustrated by the bad planning and the bad thought processes, and a lot of it comes from, in my view, this kind of not. You're right. You touched on it earlier. It's not necessarily the idea of central planning that is bad, because you need to plan. It's the idea that there's a lot of people that shouldn't be involved in central planning doing it in Europe, and that's kind of a big issue.
Who does the
There was one.
planning? You know, that's
Yeah, that's it. Yeah, and I mean, just on that, as you're saying it, there we have another chart there, and it's from the Financial Times, and it's the U.S. tech sector comparison to Europe, and you can see there in it the dark blue area in the chart is uh, data stream software and computer service indices, market value in trillions. And the dark blue area is the US, and then Eurozone is pink. So you can't even see
it's not
the
there.
European. It's not there. It's non-existent. And then the light blue is Europe excluding Eurozone. So it's similarly, it's just overlaid on top of the pink. But that's a lot of the issue, because we talked in one of the previous podcasts about how Donald Trump is trying to beckon in the golden age in the US, and even at the beginning of this conversation, when I mentioned that the Middle Eastern conflict ending is kind of the springboard for investment into the Middle East, and vice versa into the US from the Middle East, it's like in the US they're talking about trillions of investment into the US, a lot of it in AI, in technology, in energy stuff, and military and things like that. But then when you look at Europe, it's not that. It's this regulation factor. It's like we're going to regulate everything. And understandably, regulation makes sense to a degree, because you have to make sure that the citizens are protected and that no one's being exploited. But it's just in my view, and I probably in your view, as we've already touched on it, it's people that shouldn't be making the regulations, over creating the regulations, and kind of strangling things really in many ways.
Yeah,
Would you
I
agree?
agree. I mean, I'm not a fan of extreme regulation. I think it's counterproductive. One comment on this chart. This chart shows market valuations. So you know, we've looked at Nasdaq, right?
Yeah,
It's at its all-time highs, and you would expect this picture to be this way. But the fact that European companies are so small in comparison, that
I think that's the shocking thing. It's when
that's
you
the
compare
shocking
the
thing.
two.
Yeah,
Yeah,
yeah. But yeah, it's market caps, so you know,
yeah.
it doesn't have to translate into actual good technology. It might not have the good technology, but just like the market is exuberant or something.
I think that I'm getting across my desire, I guess, for Europe to be a bit more of a growth focused area rather than a regulated focused area, and I think you share that with me as well,
I
Paul.
do,
But
I do.
in the short term, would you have any forecasts in what you think might occur, even looking at rates or something like that?
Yeah, so making forecasts is difficult, obviously. You know, I don't have a crystal ball. We can look at the swap markets expectations of interest rates. And you can see that we're kind of done for the year in terms of what the swap market thinks for ECB rates. So I think that's about right. I think we'll stay around to 5% target rate until the end of the year, but then you see some expectations of low rates going into 2026. I think they are kind of benign for my liking. I think we'll see further cuts. I think we'll see bigger cuts than this. So in terms of rates, I think we'll stay put until the end of the year, but then next year we'll see a couple of cuts again, so maybe 50 basis points or something like that. I think it will be very difficult for ECB to stay at these levels if the Fed cuts aggressively, and I think they will at some point. So, in terms of rates, I think that's where we are. In terms of fiscal push, I think it will be there. I think what they have planned, they will deliver. And I think that in turn will improve, manufacturing numbers, GDP numbers, etc. I think that is a positive. Hopefully it will bring about jobs as well. So I think euro against dollar is an interesting play again. I think the dollar is being debased not only against gold and silver and other commodities, but also against other currencies, just because their needs are so much bigger. We can look at this chart, which shows you government debt of European Union and US total debt outstanding. And this chart, it's normalized for 2000, so 30th of June of 2000, and the numbers to the right are just percentage changes. So you can see how much bigger the rise in US debt has been in comparison to European debt. And it's it just means that US will probably have to print more money just to keep this thing going in comparison to EU. And I think that's positive for euro. Generally speaking, it's obviously not the only factor, but I think it's an important one. And in terms of forecasts, the last thing I would mention is it's kind of important what happens to capital flows, because if we see a recession in US, and it's increasingly likely that something is off in economics data in US. We have a government shutdown now, so we're not getting the recent data. They just don't publish it. It makes me wonder about the timing of it all. But if we have a recession in US, and if we find ourselves in a situation where all this capex spending on AI was unproductive, which is a reasonable assumption. I'm not saying that it's something that's going to happen, but say it will. We could see a big repricing in U.S. equities, for instance, and capital outflows. So if you couple that with the rise in euro or the fall in the dollar, it could lead to capital returning back to Europe. And that's very positive, obviously, because that capital will be put to some use one way or another.
Regulation.
I don't think so. Capitalists don't like regulation.
Yeah.
I think they'll just find ways to invest and fight the regulation. In terms of regulation, I don't know how to fix that one. I have no idea, basically. I think it needs a big change just in the way generally we do things. I think that, if I was making these decisions, I would focus on municipalities rather than nations. and look for solutions for problems on local level and then take it from there.
So localize rather than nation.
Yeah, that's what Chinese are doing. Like for all the centrally planned economy talk, when they do vote, they vote for their local municipality things, right? So, there is more weight to local decisions as opposed to federal decisions, and the federal
If
decisions are kind of coming from the local ones. So
if I were to briefly add one last chart into our discussion about that, just to interestingly kind of compare that point, there's an industrial production chart I have, which compares Switzerland, Europe, and Germany in terms of industrial production, and you can see there's a divergence there between Switzerland, Europe, and Germany. And just like China, Switzerland is a highly municipality-based country. So it's they have these cantons and regions which are the focus rather than the nation, and they base their tax areas on each of these cantons. Or if for anyone listening in Ireland, it's counties would be the equivalent. So they tax based on county, and they drop tax based on if a county is performing well or badly, and they increase it and vice versa to try and encourage production and people moving into the area and industries. And it's a highly municipality focused country, just like China. And you can see that they've taken a divergence there in terms of their production, similar to how China is widening the gap between itself and Europe. So I think that's just like a fun little comparison as well.
Yeah, I mean, if you think about it, it makes a lot of sense, right? Who knows better than the local guy? It's definitely
Yeah.
not someone in Brussels. They probably have never been to Dublin or Riga or even like smaller cities or something. So I think like if I was tasked with the challenge of changing the system, that's the route I would go for. I think. I think there is a lot of logic in that, and it is just kind of natural, I think. So we'll see. Maybe this happens. It doesn't look that way at the moment, but maybe the examples of Switzerland and China will make us rethink this, and it will make our politicians think a little bit more. I'm not holding my breath, but maybe.
Well,
Let's finish off on a positive note,
Yeah, there you go. Okay, I could have come in with another banger, a negative banger, but I won't. I think we've had a nice balanced discussion in terms of you've given kind of a good amount of reasons to be positive about Europe and its state and how things are, and I just have offered a little bit of counterpoint now and then to show some of the things that need to be tightened up and the mindset changes that potentially need to happen to make us even more competitive. But yeah, I think that's actually a pretty good place to leave the discussion. What do you think? Is there more? Anything else? Yeah?
No. I think it was a balanced discussion. Obviously, we could touch on many more things, but we have to keep it tight.
Yeah.
So yeah, I think it's good.
Yeah, exactly. There is many more things, and I know for anyone that knows me and they push me into talking about this in person, it's usually a regretful thing to do because I can just go off on a rant on it. It's something that's very, very close to my heart and I've been following for a long time. So it's nice to talk to you about this as well, Paul, and get the professional perspective rather than just some madman who's fixated on this. So
I think it's okay to rant about stuff. I think it's fine.
Yeah, that's true.
You
that's
should
true.
do it.
Yeah,
If you feel you have to do it, you should do it.
No, for sure. Okay, I think we might leave it there then. And that was once again a very insightful conversation and very interesting. And hopefully for people listening, it kind of gives them a bit of a food for thought as well, and a little bit more perspective on the macro scale of things. Because when people, I don't know, Paul, you definitely don't have this issue when you're dealing with this. seeing as it's your profession. But I know when I talk to friends or I talk to people I know, we often have the tendency to talk and think about things on the micro scale. So we're talking about, oh, this company is doing well, this company is doing well, but really the big thing that defines it as well is how everything is performing overall. And hopefully these discussions do provide that perspective to different people that listen, because if you understand how things are going on across the world, that usually dictates how everything is performing on the micro, really. So
Yeah, I think
yeah.
I think it's a valid point. I think everyone should strive for a broader view on things, because we live in a very big place and it's very different. So sometimes just looking at things from a higher level kind of thing, broader level, puts a lot of these issues in place. I think for me personally, it's a good way to rethink some of the local frustrations I have, like any
Yeah.
other person, right? So
Yeah.
just looking at it in a broader sense makes it easier to accept, I think.
Yeah. Exactly. Okay, so let's leave it there, and we'll do our next podcast. When do you think? Another 2 months or so,
Maybe
or in the
close
new
to year
year?
end, maybe December or early January, something like that.
Yeah, sounds good. As long as you're not too busy and Aquarium aren't doing too phenomenally, and I can't get a hold of you. But we can we can.
I'm always available for you, Cormac.
Yeah. Okay. Sure thing. Okay. Look, Paul. Thanks very much for the discussion, and thanks to anyone that's listened as well.
Thank you, my friend. And until next time.